Amazon, Alphabet, and Apple all gaining about 20% so far this year in 2023. For a look at what the charts say about whether the tech rally can last, Carter Worth, charting founder and CEO, and that's, I guess, everybody's question at this point. Is this a kind of a reflex rally occurring in a continuing downtrend, or have we made a bottom in tech, Carter?
Sure. Well, I think to some extent it's all about the sequencing. We know that, right, the NASDAQ 100 total return, the index plus dividends, completed 13 consecutive years of gains. No index has ever done that. There might be a few where there's hyperinflation, but no real index going back to the 1900s has accomplished such a feat. And then, of course, a very bad year last year, down 32. And so a ricochet or rebound is perfectly normal. The question that you ask, and we all have to wonder, of course, is it just that, a ricochet, or is it the beginning of something more enduring? I don't know. But I do know this, that sequencing, the sheer nature of the bounce, the FANG is up 31% year to date, trading 20% above its 150-day moving average. I think at this point, at a minimum, one wants to sell calls against longs, trim, just in terms of the sequence. The epic run-up, 13 years in a row, positive returns, the impressive collapse, 32% last year, and now this big ricochet. Fade it, trim it, write calls, take some measures.
But you might need to admit that you missed the lows. We're not allowed to buy stocks. I would have mortgaged my house with Netflix way under 200 after being at 700.
Oh, well, individual names, sure. But you're talking about the aggregate. The thing about the tech move here is it's not specific to large cap, right? If you look at the tech sector's performance year to date, 15%, let's say, versus S&P index itself up 8%. It's the same setup in the mid cap and in the small cap, where we have a sector outperforming. And it's the equal opposite of defensive. For instance, tech is up 6 weeks in a row. Healthcare is down 6 weeks in a row. So we know it's ever thus. There's rotation, there's flow. But at this point, if one is tactical, you've had so much movement in one area. The equal opposite is out of, for instance, healthcare. You take measures, you trim, you navigate within the confines of the move.
I'm listening to you. You're using words like trim. You're using words like fade, like sell calls. You're not saying buy puts.
Oh, I would do that. I mean, sure.
Oh,
it just depends on what your risk nature is. You know, put on a risk reversal. That's one of the more conservative ways to do it.
This is a tech NASDAQ, that thing you're talking about. So with the NASDAQ where it is right now, you would think that by year end, let me just see exactly. I mean, it's had an unbelievable rebound. So 12,100. You think it goes back under 10,000?
I think we'll get close.
You do?
I bet you we're sideways to down on the year. That's my guess.
From here?
Yeah.
Sideways to down.
That's a long time, Joe. 11 months.